And Ryan, DC, got to be buzzing. The Commanders, big win last week. You got Inauguration Day coming up here on Monday. It's got to be hopping in DC.
It is, listen, between the swearing in of the new Congress, the Commanders are definitely the story around this town, and then the inauguration on Monday. It is buzzing here in Washington, no doubt about it.
And we'll get into this more, but then we got, I mean, what timing? We have Ryan on the show today. We get the announcement on a new FHFA Director nomination, Bill Pulte. And
Yeah, that's exciting. Listen, I think it's really great that President Trump has made a nomination for FHFA even before he has been sworn into office. I think it illustrates the importance of the roles we had deeper into 2025, the importance of the role to his administration. We're looking forward to working with the new nominee, and there's a lot going on in this space. So I think it's going to be a very busy year once he's through the confirmation process.
yeah, because we had Mark Calabria on a few times. He's actually coming on again in
Mhm.
a couple of weeks. And the former FHFA director, he was saying we wouldn't even get a nominee probably until this spring. So
Yeah, I mean, I was talking with folks yesterday, both in the sort of the banking lobby as well as with housing groups, and I think there was a lot of speculation that we wouldn't see a nominee until the spring, and that it might be as many as 12 months until someone was confirmed. I think with a nomination right now, the banking committee is going to be busy, right? So this is really one of the first financial regulator nominees to be out there. Expect an FDIC nominee, an OCC nominee, and others. The banking committee is going to be pretty busy in the first quarter. The nominees have to get all their paperwork to the Senate Banking Committee. They got to process that. I'm sure that he'll be up on the Hill before too long, meeting with the members of that committee. And, I think you could possibly see a confirmation hearing maybe in March. And then what I look for is, on these types of nominations, Congress works, best in crisis and on deadline, right? So there's not really a deadline for this or a crisis, but what to look for is when will the Congress go out for recess? Because when they end a DC work session, oftentimes you'll see this level of nominations clear then. So after the confirmation hearing, if they do March, you're looking at, okay, is there a recess in April, and is there an opportunity to get floor time in the Senate before that, or will it be done before Memorial Day? A lot of that is predicated on how well the pre-confirmation process goes for the nominee, and certainly how the nomination hearing goes.
some incredible insight before even the official intro of the show, Ryan. So off to a great start. But
Now, listen, I thought you guys just like to jump right in.
Jump right in. Hey, Brian. So the I mean, there is a lot. It is really, to be blunt, President-elect Trump has certainly sucked the air out of the room in terms of news, in terms of political moves, and so forth. Doesn't the an FHFA director has to be confirmed, right? I mean, Congress isn't totally neutered, shall we say, right?
No, absolutely. There's a process, and you're seeing it play out. Today they had the confirmation hearings for Secretary of Housing and Urban Development in the Banking Committee, and the Finance Committee was conducting their hearings with the nominee for the Treasury Secretary. The Senate plays a very important role, especially in a pretty evenly divided Senate. So none of the nominees that President Trump has sent to the Senate can really afford to lose any votes. You would hope that when you get to positions like FHFA Director, FDIC, OCC, that the nominees have the capacity to earn more than just the Republicans. You'd hope that there'd be some bipartisanship in these selections.
Now, have you looked at Pulte's background at all? I have not.
Well, just briefly, he's done a great deal of philanthropy. He's has experience in private equity, and of course he comes from a very famous home building name. So he has been in and around this space for a long time. I don't know him, and I don't know much about him, but the name does jump out. Especially when you put it side by side with this role. I mean, I heard in the fall that he was being considered for HUD secretary. So he's certainly been on the transitions radar screen and the president-elect's radar screen for positions like this.
All right, let's go ahead and formally get into it. This is The Big Picture. I'm Rich Swerbinsky with Onward and Upward Consulting, joined, as always, my esteemed colleague and co-host, Rob Krisman. Rob in Reno, Nevada, the unofficial home front this week. So
The biggest little city in the world, in America, the biggest. I forget what the thing over the street says.
and we still haven't formally introduced this week's outstanding guest, and with one of the longest titles in the mortgage industry, President and CEO of the Council of Federal Home Loan Banks. It is our friend Ryan Donovan. Ryan, thank you so much for making time for us.
Rich and Rob, it's great to be with you. And Rob, good to see you again. You were in Nevada the last time I saw you as well, but we were in Las Vegas, which is not a little big town.
That's right.
I was thinking about that. We're going to digress right off the bat here, Ryan. So the National MBA this year in October is in Las Vegas. And the thought of spending 4 or 5 days in Las Vegas just really doesn't.
It's hard.
I just shake my head. I don't know.
I once worked a conference, Rob, in Vegas for an association I used to work for. We had our annual there one year. It was in like June or July, and I ended up having to be there for 8 days, and that was miserable. But if you never go outside, you figured it out halfway.
I didn't leave the Bellagio. I was in Vegas for like 4 days for that Acuma conference, and I never left the walls of the Bellagio.
But don't you want? I mean, it's not healthy.
No,
I know. Yeah, you're leaving the Bellagio and wandering Las Vegas can be less healthy, actually. But
well,
the Bellagio Casino was happy that I stayed, honestly, in the building the whole time. I can tell you that much. So
the house always
maybe the
wins.
NBA will have excursions to, go on the dam tour, or like go look at Henderson, where people flee California to move and build big houses. Anyway, sorry, I'm really going off the rails here.
we're used to it. And so much, Rob, this week, the news is just piling up in the mortgage industry. We mentioned Bill Pulte getting nominated as the FHFA Director. We had some positive inflation data that's moved the bond market in the direction we all want to see it go. M&A is really, once again, rampant in the mortgage industry. You even noted you may have to, take a little sojourn from the call today because of some M&A news that is it Krisman LLC acquiring Housing Wire? No.
You're not going to get one word out of me, Rich, other than I may have to jump off.
So home builder confidence index up, not surprisingly, in the latest iteration that just came out today. But Rob, once again, I throw all that at you to get us started down the path here. What tickles your fancy in that mess?
Well, I continued. So I just came from a private company event, and the big question out there is continues to be why, with the Federal Reserve cutting rates, why have mortgage rates gone up? And I've been in the bond market for some period of time, and you learn that the bond market, kind of like the stock market, I guess, but it's kind of like a rubber band, and you can stretch it so far, and then it's going to come back, and stretch it again, it's going to come back, and it doesn't always move in a straight line and so forth. So we've been creeping up. Mortgage rates have gone above 7%. And so at some point you'll see a pullback, and that pullback which I think we've seen based on the consumer price index. You know, the CPI numbers came out, they weren't that jaw dropping. I didn't think, you know, it's like a little bit lower than estimates. Great. You know, inflation, yeah, continues to be somewhat under control. But I think that the bond market had had enough of bond prices going down and rates going up. And so they use that, investors use that for an excuse to step in and do some buying, which was nice. So I think perhaps the bond market got a little ahead of itself, and now we've come back and rates have dropped a little bit, which is nice. That's not to say it won't continue or will continue, but there is, you know, the reasons that rates have gone up in the last several months are still with us, right? There's the tariff question, inflation question, tax cut question, uh, weak dollar, strong dollar, uncertainty. There's always uncertainty, but there are a lot of questions out there about what is going to happen day one, day two. What about all these executive orders? What kind of impact are they going to have? What's going to happen to the workforce of builders? Is there going to be a tariff slapped on Canadian lumber? I mean, there's a lot of questions out there that will help determine the inflation rate going forward. And I think that is causing people to kind of hunker down a little bit when they get nervous or when they don't know what's going to happen. They tend to hunker down. So when that happens, in this case, prices go down a little bit and rates go up a little bit. So that's kind of the 30,000 foot view of why rates have been going up. And yeah, it's nice to see them come down a little bit yesterday. I'm not convinced that'll continue though. So
I know we're a little bit on the opposite side of the fence of that. I feel like, you know, we might get a little rate relief. I think it's going to just be very volatile, really in 2025, due to a lot of the factors you mentioned, but we'll see how it plays out. And should be noted, the big picture presented by our friends and partners at Depth, 2 decades of providing their deep industry expertise to their clients in the mortgage and the fintech space, strategic insight, content development, branding, PR, just incredible people and highly, highly capable at Depth. So if you're looking to have your story told in the mortgage industry, check them out, Depth. So Ryan, let's get started with, you know, the Federal Home Loan Bank system as a whole. You know, there's just a lot of misperception, especially amongst the independent mortgage banker community, you know, about FHLB, why they were created, the role they serve. So if you could just start there for us and tell us, enlighten us.
Yeah, and you know, Rich, I might just say that there's oftentimes just a lack of awareness. I'm not even sure that there are misperceptions, although we do run into misperceptions a little bit. But more often than not, it's just that either folks have never heard of us or they don't know what we do. So I appreciate starting there. I mean, Federal Home Loan Banks are cooperative financial institutions. They're member-owned financial institutions that were created by Act of Congress in 1932, and really with a mission to provide liquidity to institutions that are lending and active in the housing finance space. We also have a mission to support housing affordability, and we've been fulfilling that mission for the better part of the last century. Our membership, you know, our banks and credit unions, insurance companies, and CDFIs, that's determined by Congress. And you know what we do is we take housing related collateral primarily, and our members borrow against that so that they can continue. They have the liquidity to continue to meet the borrowing needs of their customers, members, and communities. So we're active in this space. There are 11 regional home loan banks today with about 1.3 trillion in assets, 6,500 members, and we are a vital partner to those members in making sure that the liquidity continuum flows, that we're helping to promote economic empowerment, financial stability, and housing affordability.
Something tells me, Ryan, you've said all that before.
Yeah, you know, I've had an opportunity a time or two to try to explain the system. It's you know, listen, when you're providing liquidity, there's a bunch of different metaphors that you can use. You know, but you know, I think the key thing here is we help enable particularly community-based financial institutions to access the capital markets so that they have the resources that they need to be active in their communities and help their communities thrive. It's a really important role. It's one that is unique among the government-sponsored enterprises and unique in you know, sort of the global financial services sector.
And
So IMB can't access the Federal Home Loan Bank system. Is that correct?
Well, not directly. You know, Congress has not extended membership to them, but you know, many of them work through wholesale lenders that are members of the Home Loan Bank. So they have access to the benefit in that regard.
So like if Fifth Third, for example, had a wholesale channel, then IMB could broker loans to Fifth Third and
Yeah,
indirectly
they
access.
would. Yeah, they would if they had a relationship with a member of the Home Loan Bank. You know, they would access it that way.
Okay.
And I sold into the Cincinnati Federal Home Loan Bank my entire banking career, and it was just, yeah, a great experience. I mean, it's, you know, sans delivery fees and just really personalized support. Our bank took out a lot of advances that helped us fund just banking operations and our mortgage banking operation. And the 11, they all operate independently, Ryan, but I guess your role as the president of the council, if you could just, yeah, talk us through like,
Sure.
yeah, how that all works and the synergies amongst the 11.
Sure. Well, the Council of Federal Home Loan Banks is essentially the trade association for the home loan banks. So think of you know, Mortgage Bankers Association, American Bankers Association. We're a much smaller organization than those, but we're really functioning in a very similar way. We want to make sure that we're bringing the banks together. They've asked the council to help organize that, so we're speaking to policymakers with a unified voice, that we're presenting ourselves to the media and to our stakeholders in a unified way. And you know, that's important for any type of industry group to do. You know, over the last couple of years, I think the system's done a lot of looking in the mirror. And you know, one of the things that they saw was, you know, we have a reputation for not being unified or not speaking with a unified voice that we want to turn around. And that's one of the things that that my team and I here at the council that we try to do. I would say, you know, over the last, I've been here now almost 2.5 years. There's been a lot that has brought the home loan banks together to unify and to stand together on issues. And when I engage the banks individually and also collectively, I see a lot of common interests and a lot of common concerns and an eagerness to work together to address those.
It's amazing to me how complicated the financial system in the United States is. And here's an example. Here's something as large. I mean, you say that the MBA is larger, whoever, American Banking Group is larger, but you have a lot of heft, even though you're smaller than those groups. And it's almost as if you were to ask the average person who's in mortgage banking, for example, they may not have ever heard of the federal,
Right.
like the whole system, much less asking, you know, Joe, you know, the waiter at the local, you know, diner about it. They would have no clue. It's just, it's such a complicated system, and somehow it works.
Well, and so to the extent that we have any heft, it's because of the members of the banks, right? It's the banks, the credit unions, the insurance companies, CDFIs, that, you know, at least from a political perspective on Capitol Hill or with any given administration, you know, those are constituency groups that are held in really high regard. We're able to bring them all together in this. So a lot of what I do is interact with the various banking trades, the industry trades, our member trades associations, so that they too are all focused on in the right direction. And, this is a time of year where organizations like ours put out our advocacy agenda, what we want to accomplish in Congress and with the administration. And frankly, for the first time that I can recall, as someone who used to write the advocacy agenda for the credit union space, the three major depository trade associations, American Bankers Association, Independent Community Bankers of America, and America's Credit Unions, all have federal home loan banks as part of their main advocacy agenda. I think it really speaks to what you're talking about, Rob, in terms of, hey, the complexity of the system and the important role, really the vital role that the home loan banks play in ensuring that that system remains liquid.
Ryan, if you could explain for the listeners, like the key areas of differentiation, Federal Home Loan Bank system versus Fannie, Freddie, the other government-sponsored enterprises, like why a community bank may choose to sell into the Federal Home Loan Banks as opposed to Fannie, Freddie, I think would be good insight.
Yeah, so let me talk first sort of about the core advance activity that the home loan banks provide. When when a lender is selling to Fannie and Freddie, they're selling the mortgage. When they're interacting with the home loan bank for advance activity, they're using the collateral. They're using their assets as collateral for the advances. So they're really borrowing against that collateral. Now, we take into consideration the risk profile of the member. We're constantly valuing the collateral. We take a security interest or perfect a security interest in the collateral. But really, they're borrowing from a home loan bank, whereas they're selling to Fannie and Freddie. We do have an acquired member asset program and an AMA program. There's actually 3 of them within the system. I think 9 of the 11 banks participate in those programs that will purchase loans from our members in a similar fashion to Fannie and Freddie. But the core business of the system is the advance business.
And like Fannie and Freddie, Federal Home Loan Banks taking under the supervision of FHFA, again, new director nominated today, Bill Pulte. So that's got to be, just somewhat challenging. And we've had the same discussion with people at the GSEs, just, new administrations, new agendas, maybe things you're working on. Talk us through that part.
Yeah. So, over the last 2.5 years, we've had a lot of interaction with FHFA. The banks do, of course, on a day-to-day basis through the supervisory process. They're very engaged with FHFA, but over the last 2.5 years, there's certainly been a greater spotlight on the home loan bank system from a policy perspective coming out of the agency. That has been something that has really brought the system together. I think that it resulted in the system making some really important changes to how they operate, particularly around affordable housing. By law, the banks are required to put 10% of their net earnings into an affordable housing program. And a couple of years ago, each of the banks committed to doing at least an extra 5% voluntarily. What that results in is last year, and we'll have the official numbers come out in our combined financial report, I think in March, but last year, the banks contributed more than $1 billion to affordable housing efforts. Now, we were already the largest single source of private capital support for affordable housing in the United States, but we went above and beyond at a time, I think, of really critical need. There's a huge supply crisis, and a lot of those funds will help projects that are designed to help alleviate that. So we've been under this microscope with, under FHFA, and, it remains to be seen what's going to happen in the new administration. But we're very hopeful that we'll have a productive and constructive relationship with the new administration, that, there may be some opportunities to address some policies that have impeded or made it more difficult for us to serve our members. And so we're eager to see what the next chapter looks like.
Ryan, you mentioned affordable housing. What was it? $1 billion? $1 billion?
$1 billion, yeah.
Do you know where the money went?
Yeah, absolutely. So, each of the banks will report both to FHFA how they've dispersed their affordable housing program resources. They're also reporting, any voluntary programs that they have as well. The system put out for the last 2 years has put out an impact report that describes at a system-wide level where those monies have gone, using examples from each of the banks to really sort of humanize those stories and show the local impact of that. And I think the banks are doing a better job of trumpeting that work individually through press releases, press events. A lot of times they and this is something we're working to do more of, but if we've got a project we're supporting in a member of Congress's district, getting with that member of Congress and showing them that, hey, we're a part of something really good that's happening in your district. And more often than not, of course, the member of Congress will take credit for it, which is fine with us. But it helps, to the point that was made earlier, many don't know about us or have misperceptions about us. It helps make that connection a little bit stronger. And I think that's to the benefit of not just the system, but of course to the members of the system.
Interesting.
Ryan, the Biden administration, clearly, sought to use the government-sponsored enterprises, Fannie, Freddie, Ginnie, and Federal Home Loan Banks to help fulfill affordable housing goals that they had. Again, still yet to be seen which direction the Trump administration is going to go. But it seems like the tea leaves are, they're going to focus still on affordability because it's such a huge issue in America, but maybe from a different lens. There's been a lot of talk about repurposing federal lands, the help for the home builders, obviously connections with the home building community, and resuscitating and revitalizing the opportunity zones initiative that maybe soon to be confirmed HUD Director Scott Turner played a role in. So could you see the federal home loan banks, playing a role in those initiatives, affordable housing from a different lens?
Yeah, I mean, I think, listen, our mission includes support for affordable housing. The thing that I would add to that is that the home loan banks are really limited by Congress in terms of what we can do, right? So our mission is essentially the powers that Congress has given us, the restrictions they've put on us, and the structure that we operate in. And so, again, over the last couple of years, we've taken a really close look in the mirror. We've talked with stakeholders. We've listened to stakeholders and tried to respond. And I think that I'm hopeful that is something that's going to continue. You're absolutely right that a change in administration could result in a change in how that is approached, from the government. And so we'll be engaged in that and to see where that goes. But you kind of hit on something I've been telling folks since the day after the election. There are many things that are going to change when President Trump takes office again next Monday. But there are also some things that aren't going to change. And certainly we still have a tremendous housing affordability crisis. And largely a function of supply. And so in some way, the selection of Mr. Pulte as the FHFA director might be a little prescient in that you're drawing from at least a family very well known in home building.
This is the big picture presented by our friends at Depth. 2 decades of providing expertise to their clients in the worlds of strategic insight, communication strategy, branding, public relations. And Ryan, the next place I wanted to go is the regulatory side of our business. A lot of speculation that there could be some regulatory relief coming to a lot of areas of the country, but real estate finance being one of them. Anything there like top of mind that would be helpful to your mission, your members?
Yeah, I mean, I think, you guys probably know these numbers better than I do, but, I read an article earlier this week that identified the increase in the cost of originations has gone up, from, a few $100s, several years ago to maybe $12,500 today. I may not have the numbers exactly right, but there's been a substantial increase in the cost of originations, driven, I think, largely by not necessarily FHFA regulation, but CFPB regulation on mortgage lenders. One of the things that's often said about the home loan bank system is, well, your members are doing fewer and fewer mortgages, and there's a number of reasons for that, but I am absolutely confident that one of them is the oppressive regulatory burden and the increased costs associated with originating the mortgages. So, I think there's expectation, at least among the folks here in Washington that follow the policy and probably the market, that there'll be a reduction in regulatory burden over the next 4 years. And if that is beneficial to home loan members, it will help the system continue to be relevant to them and to have an impact on housing finance. I think, in our place, in our space, what I think we hope to see is sort of a hopefully a normalization of the relationship with FHFA, right? So this agency is special in that it has just 14 entities that it regulates. It regulates and supervises the 11 home loan banks, our Office of Finance, Fannie and Freddie, and 2 of them are under conservatorship, and that's a conversation I think for another time. But because the universe of regulated members is so small, I think their impact on how the entities operate can be outsized relative to what you would see from an FDIC and OCC or the Fed as a regulator. And I think one of the concerns is we want to make sure that the home loan bank system functions for our members in a reliable, efficient, cost-effective, and quick way, right? We want to, our members, I think that's the essential value proposition. So as we look into 2025, we want to make sure that there's policy that is helping strengthen and advance the value proposition for our members, because what that does is it enhances our impact both in the liquidity continuum, but also importantly in terms of housing affordability.
Can I ask a blunt question?
Yes.
And I was sitting here, you brought up a point that made me wonder. There's the old saying, kind of follow the money. Are you paid, is your group paid from dues by members, or do the funds come from the federal government?
That's a great question, Rob. We are paid by dues from our members, and our members are the 11 banks.
Okay.
And as I think it cannot be stated enough, which is that the 11 banks are member-owned financial cooperatives, and they're privately capitalized. There's no connection in the system to taxpayer funds or taxpayer support at all.
Getting caught up on the chat and the Q&A. Had a question about the markets that the Federal Home Loan Bank serve. The 11 collectively, do they serve? They all have geographic regions, right?
Yeah.
Is it the entire country that's covered?
Absolutely. The entire country, all 50 states, the District of Columbia, and all of the territories have members in any of those areas would have access to a Federal Home Loan Bank.
a good friend of mine that worked at Fannie for years got a job covering the Hawaii one, which I think got
Mhm.
merged with, like, there was two that merged. Wasn't there like 5 or 6?
Yeah, a few years ago, Seattle and Des Moines merged.
That's right.
Yes.
Yeah. Which covers, Hawaii. That's right. Yeah. So
Yep.
that was a great gig for him. Uh, but also in the chat, a question. Oh, my friend Kelly Austin from Landmark Bank in Kansas, noting that she's very familiar. They use the turnkey and the HSP funds, and they also sell into your MPF program, which is your mortgage purchase program, as well as Freddie Mac. So, and you guys still have like pool composition limits from, I remember, right? From like when I sold into the federal home loan banks, where the entire pool population of loans you sell in has to have characteristics, LTV, FICO, right?
Yeah, I'm confident there's a number of safety and soundness restrictions on it, but it's not an area that I'm particularly familiar with.
And what else do we have in the chat? FHLBs have been a great partner. ENT Credit Union out of Colorado, one of the great mortgage originator, big one out of Colorado. And they say, by the way, Ryan, Molly Bell says hi.
Well, I worked with Molly for a number of years at Credit Union National Association, so
I
right
can
back at
attest.
you, Molly.
I mean, I've got a lot of depository clients, and they all really value just the partnership, the relationship, the access to funding, the access to the secondary markets. We've got some small community bank members that maybe aren't a good fit for one reason or another to sell into the GSEs, and your products and programs allow them to go to the street to their bank customers with great mortgage offerings.
You know, when we sort of talk about many of the reasons why folks may not be aware of or have a misperception of the home loan bank system, you know, one of the reasons is that we get a lot of attention when there are times of crisis, like March of 23, COVID, great financial crisis. But the point you're making is a really important one, which is that we're there day to day, every day for our members. They, you know, they will pre-position their collateral with us, will value it. They may not draw on that immediately, but when they need liquidity, the work's already been done for them to get the funds, you know, sometimes instantaneously. And so I think that's a really important part of the value proposition. And it's, you know, I think it's why you see the accolades here in the chat, but also I'll go to credit union, bank, insurance conferences, and even CDFIs and hear from folks just their relationship. It's great to hear, and it's I think a validation of the importance that the home loan banks serve.
Do you get involved at all in servicing?
The banks do not. The home loan banks do not get involved in servicing. I mean, if you think about it, we're just taking the security interest in the collateral to loan against it.
Right.
Now, what does the relationship between like an insurance company and the Federal Home Loan Bank look like, as opposed to like a community bank or a credit union on the mortgage side?
Yeah, so you know, the insurance companies will invest in, you know, mortgage-backed securities and other eligible collateral, and use that to help manage their balance sheets on a day-to-day basis. You know, that's an important role. I mean, you want to make sure those markets have investors, that there's money moving through those markets, and insurance companies play an important role there. And you know, some folks will, you know, I think sometimes scoff at, well, are they really involved in housing finance? Well, they are as an investor, but importantly, you know, unfortunately, we're kind of seeing this a little bit play out in some parts of the country. You need home insurance in a lot of cases to get a mortgage. You know, it's beneficial as a homeowner to have life insurance to protect your family over the long term. And so, you know, I see this as a sort of an important synergy of the financial system, and certainly within the housing finance system, insurance companies play a big role.
And the Federal Home Loan Banks, they raise money, Ryan, don't they, by issuing securities, right? Into the,
Yes.
if I remember correctly, and the securities are you're viewed as great investments just because of the strength of the Federal Home Loan Bank system over time. But that's
Yeah,
how they fund their individual operations, right?
Yeah, there's a lot of confusion, I think, among sometimes the academic community, and primarily I think people outside of the finance system about that part of the of our operations. Even CBO, the Congressional Budget Office, I think gets it wrong when they talk about the system being taxpayer subsidized, right? We issue bonds with a very clear disclaimer that these are not guaranteed by the United States, and they're not obligations of the United States. And so investors that purchase those bonds, are very sophisticated, and they can read plain English in all capital letters. So they do take a little bit of a discount on those, and it's just to your point, Rich. It's because they look at the structure of the system. Yes, Congress has provided that structure. It's set the rules under which we operate. They say, oh, this is good debt. This is a good investment for us. And because of that, we're willing to take a little bit less return in order to get into this space. So that's a big misperception of the system, because there's a lot of voices out there, including some in the government, but there's also a lot of voices that know better out there saying, hey, we're taxpayer subsidized, and it couldn't be further from the truth.
I think Rich, a large part of his portfolio, Ryan, is made up of those securities.
It's a Fannie Freddie stock. No, yeah. So
yeah.
This is The Big Picture. I'm Rich Swerbinsky with Onward and Upward Consulting. Joined as always, my co-host Rob Chrisman. And this week, really, really pleased to be joined by the president and CEO of the Council of Federal Home Loan Banks, Ryan Donovan. And Ryan, with the change in administrations and the inauguration coming up, it's not, I mean, you guys are doing God's work every day, but to some degree, right? It's kind of like hurry up and wait, and
yeah.
In terms,
well, I'll tell you, the first 2 weeks of this year, Rich, have been like a long year. It is absolutely bonkers here in Washington. I was on the Hill last week, and the swearing-in day the week before, and there is just a frenzy of anticipation and a lot of preparation for that new administration. And I know I just cut you off before you asked the question, but I just wanted to sort of validate that this is, what's going on here is there's a lot of energy behind it.
And then do you deal like how directly do you deal with the FHFA director, like your interaction with the agency?
Well, listen, I think that I have had the opportunity to work with Director Thompson over the last couple of years. She's been very great. She was always very gracious with me. She came to our conference, and what a really nice fireside chat earlier, well, I guess in May of last year. Had a chance to sit down with her one-on-one a couple of times. And, I think at a personal level, that relationship was very strong. And I certainly wish her the best as she enters retirement. It's really important for the system to have a strong relationship with the leadership within the agency. That's something that, through the council, we're working very diligently on. And I think we've got an opportunity now with a new director nominated, and next week we'll have an acting director for at least a few months. We've got an opportunity to deepen that relationship at the leadership level. But I will say just one other thing. I mean, I am, and the council is a little bit of a unicorn for FHFA, I think. Sometimes I wonder that maybe they don't know what to do with us, because, Fannie and Freddie don't have a trade association, right? The banking regulators are very used to dealing with ABA and ICBA and the credit unions, et cetera. But FHFA is not. And even though the council has been in existence now well over 25 years, we haven't always taken this role of leaning into advocacy, of taking an assertive policy position on matters. Heck, when I was being recruited for this role and sort of looking at where the council had engaged in advocacy. I was looking for comment letters, FHFA, et cetera, and there just weren't a lot. We're changing that. We're implementing a new advocacy strategy for the system. And I think that will help the relationship with FHFA change. And I expect it'll change in the positive.
Yeah, because you're right. I mean, prior to you coming on into this role, yeah, there was very little, like put out there by the council about the mission, initiatives, the misperceptions in some cases of the Federal Home Loan Bank system. And it has been refreshing to just see you've kind of embraced that, using the LinkedIn platform, to really, put it out there. What the Federal Home Loan Banks are working on, the mission that you're looking to fulfill on a daily basis. So it's certainly been noticed within the industry, and yeah, keep it up would be my advice.
We get a lot of really positive feedback from members and folks in government. We want to tell our story. It's important for folks to understand this. I think we've had historically a little reluctance to do that, and I understand that from a certain perspective. I think when you think about the reasons why Congress hasn't been able to move housing finance legislation for many, many years. One of the reasons is there's a significant risk and a huge consequence to not getting it right. And I think that there has been a perception that, hey, if we are too far out there, there might be some tinkering with what we do that could be detrimental to the system. It's not just me that says it. It's a pretty well-known saying. If you break it, you buy it, and policymakers don't want to break it. And so we're trying to make sure that folks understand us, so they can have an appreciation for the role, the vital role that we play for our members.
Well, great stuff, Ryan. I want to thank you so much for coming on the show today and enlightening us and our audience about all things Federal Home Loan Banks. Thank you so much for making time for
guys. It's great to see you again, and really appreciate the opportunity. Thanks so much.
I want to
thank you to Depth, right?
You know, our good partners at Depth, and Rob, good to see you as always. And to our live attendees, if you're listening to the podcast or watching on YouTube, go to CrismanCommentary.com and get signed up for the live show next week. Acuma's president, Peter Benjamin's going to be on, so get to learn a little bit more.
Oh, that'll be good.
Yeah, in the world of credit union, mortgage finance, and we're here every Thursday, 3 p.m. Eastern, live on Zoom. You can register at CrismanCommentary.com, or of course check out our podcast on Apple or Spotify by searching The Big Picture and doing the same on YouTube. So. But Ryan, thank you again. And
you guys have a great day. Thanks, everybody.
Yeah, and until next week, we'll see everyone then. Have a great rest of the week and weekend, everyone. And we'll see you next Thursday. Take care, everyone.
Sounds good.